The end of banking, how stablecoins quietly rewired money. 1. The question that changes everything. Do you really control your money? Most people think they do, until the bank says, it'll take 3 to 5 business days. That's when the illusion cracks. The truth is, your money moves through a half-century-old system that shuts down for weekends like it needs a nap. So what does that actually mean? It means the financial system that powers the world still runs on technology older than email. A system that sleeps, charges tolls, and makes you wait to use your own funds. Imagine Netflix buffering for 5 days. That's banking. And now, quietly, something faster, cheaper, and always on is moving in next door. It doesn't ask permission. It just works. Footnote. The global banking network, built for paper-era finance, now lags behind the 24/7 digital economy it serves. 2. The ancient plumbing problem. The global economy never sleeps. But its pipes leak time and money. Send funds abroad and you'll discover a relay race of middlemen, each taking a cut, each moving at the speed of bureaucracy. SWIFT once felt like magic. Today, it feels like snail mail. Businesses stall, workers wait, and families lose billions in hidden remittance fees. It's not inefficiency, it's a design flaw pretending to be tradition. So what does that actually mean? The modern financial world runs on a mainframe that's older than disco. And everyone's paying the cover charge. Footnote. Outdated banking infrastructure continues to impose multi-day settlement times and excessive intermediary fees worldwide. 3. The birth of the digital dollar. Here enters the quiet disruptor, the stablecoin. Think of it like a poker chip for the internet. 1 digital dollar equals 1 real dollar, no surprises. Unlike wild crypto coins, this one doesn't swing between euphoria and panic. It just works. For every token, there's a matching reserve, a real dollar or a US Treasury bill sitting somewhere verifiable. It's boring by design. But boring is revolutionary when your paycheck clears in seconds instead of days. So what does that actually mean? It means the bank's monopoly on moving money is over. Footnote. Fully collateralized stablecoins bridge traditional banking reserves with blockchain-based payment rails. 4. Speed without permission. Stablecoins don't care about time zones, holidays, or lunch breaks. They move peer-to-peer, wallet to wallet, verified by a network that never sleeps. Seconds, not days. Cents, not dollars. Imagine wiring money on Christmas morning or paying an overseas designer at 3 a.m. No gatekeepers, no banker's hours. Just value, moving like information should. So what does that actually mean? We've turned money into email. And banks still think we're licking envelopes. Footnote. Blockchain-settled payments eliminate correspondent banking delays, enabling continuous global transactions. 5. The human impact. A web developer in Manila. A merchant in Lagos. A family in Buenos Aires fighting inflation. For them, stablecoins aren't tech, they're lifelines. They move money, protect savings, and bypass collapsing local systems. When banks say closed, stablecoins say online. This isn't financial theory. It's survival tech. So what does that actually mean? The global poor finally get a seat at the table, without asking for a chair. Footnote. Stablecoins provide inflation-resistant, accessible payment options in economies with unstable banking systems. 6. From casino chip to corporate tool. What started as a crypto playground toy has become a boardroom instrument. Corporations now move millions in USDC instead of wire transfers. Real-time treasury management, global payroll in minutes, automated contracts that pay suppliers the second goods arrive. Banks used to own that business. Now, fintechs do, with faster software and fewer marble lobbies. So what does that actually mean? The castle isn't under siege. The moat just drained overnight. Footnote. Stablecoins' programmable nature enables corporations to bypass traditional cash management intermediaries. 7. When the empire strikes back. Old power never goes quietly. Banks and regulators watched stablecoins grow from novelty to necessity, and decided to take attendance. In 2025, the U.S. passed the Genius Act, turning stablecoins from rebels into regulated citizens. They now need licenses, one-to-one reserves, and public audits. The Wild West is over. The sheriffs have arrived. So what does that actually mean? The revolution got a job. But at least it comes with benefits. Footnote. The 2025 Genius Act established a federal framework requiring full collateral and audits for U.S. stablecoin issuers. 8. Two systems, one future. Tomorrow's money will live on two rails. One digital, instant, global, programmable. The other traditional, slow, cautious, heavily insured. Banks won't vanish, they'll shrink into specialists, mortgages, loans, the long-term stuff. Meanwhile, stablecoins and blockchains will handle the daily grind, paying, saving, trading, and sending. So what does that actually mean? The bank becomes an app, and your wallet becomes the bank. Footnote. Stablecoins form the operational layer for payments, while banks retain their role in credit creation. 9. The new power game. Governments saw the same playbook and said, "We'll have that, thanks." Enter central bank digital currencies, CBDCs. Digital dollars, digital euros, but this time with government software built in. Convenience? Yes. Privacy? Not so much. The irony? Stablecoins strengthen the dollar's dominance. But if the state takes over the rails, freedom may cost extra. So what does that actually mean? The future of money is being coded right now, and the terms of service will decide who wins. Footnote. CBDCs may combine efficiency with state surveillance, posing trade-offs between speed and financial privacy. 10. The punchline. Money has evolved from coins to code. The question is who writes the code, and who controls the on/off switch. Stablecoins aren't just tech, they're a vote for open finance. The banks had centuries to adapt. They didn't. Now, a few lines of blockchain code are finishing what fintech started. So what does that actually mean? The future of money isn't waiting for permission. It's already online. Footnote. The rise of stablecoins marks the most significant structural shift in global finance since the invention of central banking.